Hi, my name is Rebecca Mottweiler, and I'm going to talk to you about the COSO Framework today. This framework has been around since 1992, and it's the basis for evaluating internal controls. This framework, obviously, since it's a little old, has been updated to stay current with the times, but the fundamentals are the same for this framework. This framework is very important for every business major to know because it is the basis for evaluating internal controls. So whether you are an accountant at a firm, you are a manager in the firm, or even the owner of this firm, you should know the internal controls, the framework, how it works, why they're important, and the definition of internal controls. So the definition of internal controls is a process affected by an entity's board of directors, management, and other personnel designed to provide reasonable assurance regarding the achievement of objectives relating to operations, reporting, and compliance. So basically saying that you need to set objectives, meet them, and make sure that your company is following the rules. The framework explains the definition a little more, I think, and it's represented by a three-dimensional cube. On the top of this cube, we have our objectives, which the objectives are broken down into categories of operations, reporting, and compliance. You can set all these objectives for either the company as a whole, divisions, operating units, management, anything your company needs, and it's really on a company basis. So if your company needs more help in one section of the objectives, then you can do a little more focus on those objectives versus another company that you see. And these internal controls have components, and some of the components are the control environment, which is just the basis for carrying out these controls, risk assessment, which is obviously how to manage risk in your organization, how to minimize that risk. Control activities is keeping up with the policies, rules, SEC rules of the company, stuff like that. The next one is information and communication, which seems like a really straightforward one, but it's so important. And it's just important that information is communicated effectively to everyone in the company to hopefully minimize mistakes and miscommunication in the company. And the very last one is monitoring activities. If you are monitoring your activities throughout a fiscal year or a month, it's really important that you're looking at all the internal activities, your employees and what they're doing, audits and reports to make sure everything is keeping up with policies and following the rules. Now, these categories are broken down more with principles, and there are 17 principles in total. All of these principles explain the components a little more as I had just explained them too. And the whole point of all of these components is to support the organization in achieving the objectives that it set in the first step. So internal controls are obviously very important to make sure that your company is running effectively and efficiently as it can. And while doing internal controls by monitoring activities, which is one of the components of internal controls, you can see where there is room for improvement in your divisions, management, stuff in that nature. And the whole point of this entire framework is to meet the objectives that you set at the very beginning of the framework. Obviously, there have been changes in this framework since it was designed in 1992. A few of the changes that I thought were the most important was that the framework now communicates the information of the 17 principles, whereas before it was just inferred that we are following these principles, but now it's explicitly stated. So that's even better that that is one of the components of internal controls is communication. The new framework also brings the relevance of technology into the framework, since in 1992 they don't have all the crazy technology that we do have now, and technology is so prevalent in today's business society. The last one that I thought was the most important was it shows that there's an importance of non-financial reporting as well. So what your employees are doing or how many customers you have, not just the financial statements. For all of this information, I use Protiviti.com. It helped me figure out what the COSO framework was and why it is important.